Good afternoon again, everyone. So I think we still have a few people dialing in, but I think in the interest of time, we will just get started. I would like to invite Ms. Abigail Ng, Executive Director of the Monetary Authority of Singapore, as Chair of the ACMF Working Group on Disclosure Standards, to give us the opening remarks for this session. Ms. Ng, please.
Thanks, Sabrina. Can everybody hear me okay?
Yes, we can hear you.
Thanks. So good afternoon, everybody, especially ACMF and regulatory colleagues, esteemed speakers from the IFRS Foundation and the ISSB, and a warm welcome to all the corporate participants coming from across Asia and ASEAN, and anybody else who's joined us as well this afternoon. This is a virtual technical training session that we have today on the IFRS ISSB standards for sustainability disclosures. Just a little bit of background. Today's session is actually the third in a series of training workshops that have been jointly organized by the ACMF and IFRS Foundation's ISSB since the inaugural ISSB standards were launched in June last year. I'm very pleased to see the strong turnout and sign-ups for today, and with representatives from a wide range of companies, sectors, as well as regulators across ASEAN. I would also like for this session to extend a very warm welcome to members of the IOSCO Asia Pacific Regional Committee as well, and some of your corporates. I think most of you might be joining us for the first time today. I'm very happy to have you also partake of this journey with us. It is clear from the interest that we've had and the very warm reception and responses to the sign-ups that there is a growing interest across the APAC region in the ISSB standards. So we are very happy to be able to do this for you here today. So just a quick recap about where ACMF and ISSB are on our journey together. We have combined efforts to promote corporate sustainability disclosures across the ASEAN capital markets. This is a priority and is a recommendation actually under the ACMF roadmap for the ASEAN sustainable capital markets as well. So ACMF as a grouping, we are currently working towards assessing the feasibility of adopting ISSB standards based on each of our jurisdictions' own legal and regulatory arrangements with respect to international standards. We want to do this in a way to promote consistent and comparable sustainability disclosures across all our jurisdictions. So in this regard, I just wanted to give a shout out that we've been seeing encouraging steps by several ACMF members in considering the use of ISSB standards in the domestic reporting requirements. So to further aid this evaluation, the ACMF actually last year established a collaboration platform with the ISSB. It is called the ACMF IFRS Foundation Dialogue on the IFRS Sustainability Disclosure Standards, or the AID in short. So a key aim of this AID platform is to facilitate capacity building on the ISSB standards within the ASEAN sustainability reporting ecosystem, and that is where today's training forms part of the series of workshops under this platform. So through these capacity building efforts, we hope to support high quality, and by that we mean comparable, consistent, and reliable corporate sustainability reporting, which is going to underpin investor decision-making and capital allocation decisions. So for companies and the corporates for which this session is specially tailored to, I think the ability for you as a corporate to provide such sustainability disclosures is going to be critical moving forward for you to enable to be remain plugged into global supply chains, which I think, as you would know, are facing increasingly stringent jurisdictional reporting requirements, as well as for you as corporates to gain better access to international capital by providing your investors and financiers with decision useful information on your sustainability related risks and opportunities. So against this backdrop of why it's important for corporates, we're going to take a deeper dive into the ISSB's S1 and S2 standards and some aspects of the practicalities of what the implementation might look like. So we have here with us today Mr. Jonathan Bravo, who is the Director of Regulatory Affairs of the IFRS Foundation. Mr. Bravo will be taking us through the application of IFRS S1 in the context of climate-related risks and opportunities. Also very happy with us here today is Mr. Ping Leng, ISSB board member, together with Ms. Bella Cheng, ISSB fellow, and they will take us through a deeper understanding of the IFRS S2 series of disclosures relating to interoperability considerations for GHG emissions when applying GRI standards and ISSB standards, as well as the transition from TCFD to ISSB. I personally am very excited about this second part because we know across Asia and especially ASEAN, I think the GRI standards have been something we're familiar with, as well as TCFD. So teaching you how to use that knowledge that you already have and how it's going to be quite translatable and interoperable with ISSB, I think it's something that's going to be really useful and practical. So let me now welcome the ISSB colleagues here and hand over the session first to Mr. Jonathan Bravo to kick it off. I wish everyone a really good and fruitful session. Thank you. Over to you, Jonathan.
Thank you very much, Abigail. And of course, we're delighted to be able to join you today and address the esteemed participants, coming from ACMF jurisdictions, but as well the IOSCO Asia Pacific membership. Before I delve into the first session, I would just like to give my esteemed board member, Ping Leng, the opportunity just to offer some opening remarks. Ping, floor is yours.
Thank you so much. Thank you, Abigail, thank you for inviting us to join you this afternoon. And thank you, Jonathan. Thank you, everyone from ASEAN Capital Markets. It's a privilege of mine to brief you together with my colleague Jonathan Bravo and Bella Cheng to brief you the issues how to transit from your well prepared GRI reference reporting practice to transit to the ISSB application in near future. As we flagged a couple of times by Jonathan last year, actually it's a journey. It's a journey transit from your current practice of ESG related reporting or sustainability related reporting to the ISSB reporting. Actually, particularly in my own view, particularly it's important to countries in Asia, in ASEAN countries. For example, in ASEAN countries, we have some leading creative system or mechanism creative leading country like Singapore. We have some very important economy like Indonesia, Malaysia in this market, and we have lots of other very proactive participants from markets, from public policy makers. So in short, it's very, very important for ISSB to keep a very close relationship with ASEAN countries, with ACMF. So we are here to not only deliver our understanding on how to transit from your current reporting practice to transit to the ISSB standards, but also we will manage to be good listener to you. We are listening to your practice. We are listening to your practitioners. We are listening to our regulators, in order to achieve a smooth transit from here, from current reporting practice to a set of robust support your successful actions in the future. I think that's not only the most priority of ISSB and the IFRS Foundation, but also yours. So again, very glad to be invited to join you in this afternoon, and I'm very glad to share some of our insights and experience with you and learn from you. Thank you all.
Thank you very much, Ping, for those remarks, which I think beautifully frame the purpose of this session today. And I think we will be breaking the workshop in 3 different slots. I think the intent of this first slot is perhaps to cover more in depth IFRS S1 and how IFRS 1 supports disclosures when it comes to climate related disclosures that are materials to investors. We will be having later on 2 sessions that perhaps get more into the specifics of IFRS S2. And with that, let me just display on the screen a couple of slides that we have prepared to guide, I think, our discussions. And I think the purpose is, again, just to provide a very short overview of S1 and S2. I think the core of the session is really how S1 does operate in the context of climate-related disclosures. And I will not be covering S2 in depth. I think Bing and Bella will be running into that. But again, some of the mechanisms that we have put in place in order to support application that we trust will be able to guide your initial steps in the journey. So moving into IFRS S1 and IFRS S2, I think it's important, again, just to take one step back and perhaps just, again, try to frame what is really the benefit for companies, for you, using the ISSB standards. And of course, one key benefit is provide information that informs investment decisions. And I think this is critical. I think that drives very much the frame in which ISSB disclosures are intended to operate. It also indicates, I think, a strong dedication to sustainability disclosure, transparency, and it future-proofs, I think, the business. I think it also helps position the company favorably with investors. I think Abigail was talking before about access to international capital and how a company operates across the value of the supply chain. It also helps navigate future regulatory changes, and we've seen already quite a number of jurisdictions. Many of them are in Asia, Oceania, taking steps towards the adoption or use of ISSB standards. And this is relevant because it actually provides a useful passporting tool in order to be able to meet emerging disclosure requirements in different jurisdictions. But let's move perhaps into IFRS S1. And it is our standard for general requirements. You may have been following some of the latest developments. We will be focusing more on how it operates together with IFRS S2, but the ISSB has already announced what will be the key focus for its next 2 years work plan. And again, IFRS S1 will be operating within the context of any new projects that may shape into future standard setting. But again, S1, it really is all about requiring disclosures of material information about sustainability risks and opportunities together with the financial statements in a way that it meets investors' information demands. It is true that it already embeds the TCFD architecture. It requires industry-specific information. But for those matters other than climate, where the ISSB has still not developed any thematic standards, it refers to sources of guidance that to help identify both which are the sustainability risks and opportunities, and based on that, how those disclosures should operate. IFRS S1 is intended to be used in conjunction with any accounting requirement gap. But of course, it is also designed to operate very closely together with IFRS accounting standards. So what is really the objective? It's really to, again, ask about information that meets investor demands. And this is about sustainability risks and opportunities that could reasonably be expected to affect the company's prospects, its cash flows, its access to finance, again, that point that Abigail raised, or the cost of capital over the short, medium, and long term. Looking into what is material for the ISSB, and I should note that we have taken very much this definition from IFRS accounting standards. So many of you in the room today, preparers that are used to work with IFRS accounting standards, should be able to relate to this concept. And materiality is, we define it as if information is material if omitting, misstating, or obscuring it could reasonably be expected to influence investors' decision making. So I just wanted to frame how this really key concepts in IFRS is one that will define how IFRS 2 should operate. Moving into IFRS S2, again, it incorporates TCFD recommendations, and we will delve later on as to how those of you that have started in the TCFD journey can move ahead to report against IFRS S2. It requires material information about climate-related risks, including both physical and transition risks, And again, it also requires industry-specific disclosures. As you will understand, different businesses have different considerations. They have different operations, different transactions. And I think investors have reiteratedly mentioned they need to understand how risks and opportunities vary depending on the different industries. So what is really material climate-related information? It really enables investors to determine the effects of climate-related risks on the company's performance. It also helps evaluate the ability of a company to adapt its business model, its operations to those risks that have been identified. It also helps understand the company's response and strategy to managing these risks, but as well, what are really the risks stemming beyond the company's boundaries, so throughout its value chain. Moving more into the specifics of IFRS S2, and I will not be covering those, but there are 6 key aspects. Some relate really to the strategy we were talking. Some of these are more specific around metrics and targets. So what is really key when it comes to understanding a company's strategy? It's really about investors being able to understand how the company has responded and plans to respond or address to those risks, but as well how it is planning to resource those plans and activities, and ultimately how the company is progressing against those plans that may have reported in the past. Here, one key concept that is relevant in IFRS S1 and it also features in IFRS S2, it's really the disclosures on transition plans that the company has set and how it plans to achieve its targets. Another key element in IFRS S2, which also features in IFRS S1, is what are really the effects of climate-related risks and opportunities on a company's both current and anticipated financial performance, financial position, and cash flow. And a company is required to disclose both quantitative and qualitative. We'll talk later on about proportionality mechanisms that are embedded in IFRS S1 and IFRS S2, but there are also mechanisms in the standards that already provide an element for companies to disclose qualitative rather than quantitative. This really relates to where the information cannot be separately identifiable, whether there is a high risk of measurement uncertainty, but as well when the financial anticipated effects, this is not really commensurate with the skills, expertise, and resources, one of the proportionality mechanisms. Another important element, and I think we'll touch on that when we look into TCFD, it's really on climate-related scenario analysis. What's really the climate resilience strategy that the company has in place? And again, this takes from IFRS S2, and there are, again, a number of elements that should really be commensurate with the company's circumstances, and I trust that Bella will be looking into that. Bing will be certainly covering how GHG emissions interplay with the requirements in GRI standards, but just a reminder that requirements in IFRS S2 incorporate Scope 1 direct emissions, Scope 2 indirect emissions from the generation of purchased energy, but as well Scope 3 emissions that occur throughout the company's value chains, the 15 categories in accordance with the GHG protocol. Importantly, as I mentioned before, industry-specific information, I think it's relevant. Risks, opportunities vary industry by industry. And again, there's plenty of guidance in IFRS S1 and IFRS S2. As you all are aware, SASB standards are part of the materials that the IFRS Foundation is administering, but we have provided in IFRS S2 industry-specific guidance. And again, companies are required to consider, again, those related risks and opportunities based on industries. Moving into the last element I wanted to cover on IFRS S2, it's really what are the climate-related targets. So this is about disclosing information about targets that the company has set, either in response to regulation or it has given itself, and how it's actually meeting, progressing against all those targets. Moving into the specifics of this session, which is actually how IFRS S1 comes together with IFRS S2, and I plan to elaborate a bit more on some of the key concepts in IFRS S1. It really establishes those key concepts that are intended to be taken into consideration when a company is reporting its climate-related risks and opportunities. It talks about how the value chain operates, how a company should think about information that connects either between different sustainability risks or with financial information. Importantly, it provides guidance as to how to apply materiality. And again, it sets those targets of information that is relevant for investors' decision making. It also sets what are the qualitative characteristics of the information provided, and it establishes key parameters. And all of those of you that are familiar with financial reporting, these are actually essential. They are around the reporting entity, the timing and location of reporting, and again, connections. I'll be looking into some of those aspects later on in more detail. So what are really the key components both in IFRS 1 and IFRS 2? In addition to the objective and the scope, there are elements of core content around governance, strategy, risk management, metrics, and specific disclosures that need to be addressed. And both incorporate key appendices that are really intended to help you guide you through your initial steps in coming out with the disclosures. Looking more specifically into IFRS S1, so what are really elements here for you to take into consideration? I mentioned before with respect to sources of guidance, and again, IFRS 1 again includes a requirement to consider ACMF standards in order to identify sustainability risks and opportunities, but it also provides an option to consider GRI standards or ESRS standards when there's no specific IFRS standard talking about that. It talks about location of disclosures, and this is particularly relevant because we are seeing a number of regulatory developments looking into the disclosure of information for other purposes than meeting the needs of investors through general purpose financial reports. Some of those requirements may stem from prudential regulation, either from the central banks or from the insurance authorities. It covers as well the timing of reporting, and this is pretty critical because one of the things we've heard through our standard setting cycle is that investors are really looking forward to be able to correlate sustainability, climate-related risks and opportunities with the financial information presented in the financial statements. And they're interested in being able to depict how those risks actually do have any effect on balance sheets and income statements. Again, it also covers key information that particularly for preparers is relevant. And this is also something that the assurance providers will look into. What are really the judgments and assumptions that have been considered when putting together that information? It covers as well elements such as measurement and uncertainty, and we do understand we're at the early days of this journey, so these are important elements for you to look into. I was talking before about connections and the relevance of this, and even when we're looking to IFRS S2, it's not just about climate. I think we've issued already materials covering some of the nature and social aspects connected to climate. And it's important for a company to be able to identify what are those connections between sustainability risks. It's also, as I mentioned, when putting together disclosures, the entity should really be looking into what's the reporting entity and what's the period that is being covered. And again, whether the data, the assumptions, the judgments, the hypotheses are really consistent throughout the corporate reporting chain. I think I've covered enough about the timing of reporting, but again, just specify that ISSB standards do not specify allocation as far as information is being provided within general purpose financial reports. An important element as well is it asks for comparative information. There is a relief for the first year, but of course investors are interested not just on a particular year's outcome, but they're also interested in being able to identify trends year over year and in the midterm. So those are aspects that are all covered in IFRS 1. So those of you thinking about providing climate-related information, you should be looking back into what IFRS 1 suggests about that. So just a reminder here of why IFRS 1 provides the answers that are necessary for disclosures. It talks about which is the reporting entity, describes sustainability, it talks about materiality. It also addresses how to proceed with changes in estimates and errors. It also provides the framework as to how an entity should be thinking about how disclosures may interact and interplay with laws and regulations. It talks about aggregation and disaggregation, and these are all key concepts. Importantly, in IFRS 2, it articulates how the value chain operates, which are the key concepts and how entities should be looking into that. And we tend to lose sight of that last point on the right-hand bottom corner. Assertion of compliance, which again, it's one requirement in ISSB standards, but I think it will be particularly relevant for investors given many jurisdictions, many companies will be transitioning over a period of time, incorporating disclosure. I think it's important to be able to guide investors as to how they should be reading the disclosures coming out from an entity. So there are a number of key materials incorporated in IFRS 2 and S1, and we invite you all to look into that. There is accompanying guidance. These materials do accompany the standards. They have been released, but they are not authoritative part of the standards. They are, however, relevant in order for you to be able to address what was the thinking behind some of the requirements in IFRS 1 and IFRS 2. An entity is not required to apply the guidance, but it is actually important for you to be able to identify how the requirements do operate. Again, I want to place perhaps the focus on basis for conclusions, because I also understand that there are a number of regulatory colleagues in the call today. And I think it is important to understand how the board came along to include some of those disclosures and the rationale, the articulation, the thought process, the deliberations, all of that is really articulated in the basis of conclusions. These are, for instance, important elements that came out as part of the discussions of the transition implementation group, how entities, how regulators should be thinking about the accompanying materials supporting the standards. If I move now to some materials that are part of the requirements, again, I was talking before about the industry-based guidance that's included in IFRS 2, and it's really organized by industry, and it's intended to enable you to identify which is the industry in which you operate, and within that industry, which are really the critical, important material climate-related disclosure topics and metrics that are applicable depending on your specific business models and operations. And again, that is specific to climate, but IFRS 1 does provide as well a requirement to consider what are other relevant risks and opportunities outside climate. In relation to what's the guidance in IFRS 1, I think it covers as well materiality. I think if we look back to what are really the core aspects of both standards IFRS 1 and IFRS 2, I think it's the disclosure of material information around sustainability risk and opportunities. And this will be a useful tool for you to identify how to run that particular piece. One aspect as well that was recently released by the IFRS Foundation was the IFRS Sustainability Disclosure Taxonomy. I think this is a development of the last couple of months, but that's already available out to you. And again, digital consumption and gather collection of information is hugely important. A key benefit, of course, is for investors to be able to extract, analyze, and compare information, and they can actually benefit from an expanded population of data that will provide information about possible investment targets. But for you, for companies, what are really the benefits? Of course, it's really being able to increase investor coverage and access to capital, including beyond your borders. And looking again to our regulatory participants today, the taxonomy also delivers the ability for them to be able to monitor through technology-driven tools in relation to their supervisory and enforcement action. But it also allows them to be able to share information across different regulators. We were talking before about prudential regulators, insurance regulators, but also exchanging information across border for those entities that may have operations that touch on different jurisdictions. So how do we operate our taxonomy? Of course, the role of the ISSB is to develop the ISSB standards, and the taxonomy has been developed again to take stock of the requirements in the standards. What companies can actually do if they intend to report in accordance with IFRS S2 and IFRS 1 is to use specialized software to be able to tag disclosures using the taxonomy. And again, this will allow investors to be able to analyze these disclosures. So bringing it all together in order to help you with those discussions, and before I move again to remind some of the proportionality elements in IFRS 1 and IFRS 2, how can you get started? I think again, the purpose is to consider what's really the overall and specific disclosure objective in relation to each of the requirements. It is important for you to be able to identify what is information that it's useful, what are the relevant requirements, what's the materiality approach, and how you can navigate through the judgments and assumptions that are included in IFRS S1. It's important again to consider those examples and guidance that's already included in the accompanying materials, the accompanying guidance. And you can make use of the proportionality mechanisms that are available in IFRS 1 and IFRS 2 if you meet those conditions. Don't forget to look into the industry-specific guidance in IFRS 2, as well in SASB, if you want to identify perhaps some connections that will be relevant, and review the basis for conclusions to understand the rationale behind some of the requirements that are included in the standards. So I was talking before when I was looking into whether entities would be able to provide qualitative or quantitative information. And I think here's a just chart summarizing what's really the proportionality that's built into IFRS 1 and IFRS 2. I should have noted that one key proportionality element in IFRS S1 is the ability of entities to be able to rely on information that's reasonable, supportable, and readily available without incurring an undue cost and effort, but as well to look into its skills, capabilities, and resources to be able to determine whether they can meet a requirement in the standards. So this affects a number of areas. For instance, the determination of anticipated financial effects. Companies in certain instances are able to rely on qualitative information, and we understand this is normal when a new standard is being applied, that entities will be able to collect improved data over time, and they will be able over time to meet some of the quantitative requirements. Climate related scenario analysis is another of those areas, and I think Bella will be covering that. The measurement of scope 3 GHG emissions is one of those areas where, again, entities are able to rely on other sources of information if information is not readily available. And I think there's a measurement framework and some elements that should be guiding you in your considerations. Again, the determination of the scope of the value chain and the calculation of metrics in certain industries. So all of that is already covered in IFRS 1 and IFRS 2. Importantly, both standards incorporate a number of reliefs for the first year of application, and some of you are operating in jurisdictions that are considering perhaps introducing requirements already in 2025, but still for 2025, you will still have the possibility to apply some of those reliefs. One is, of course, to limit the disclosures to climate. I do understand that a number of jurisdictions will be starting with a climate first approach. But again, later reporting for the first period, scope 3 not being required in the first year of application. That is important because we do believe that there will be enhanced information coming from scope 1 and scope 2 that will be featuring into the scope 3 of certain entities. Again, relying on the greenhouse gas protocol. If you have been using a different measurement method, you will be able to postpone the application of GHG protocol that year. And of course, we're not asking you to look backwards and provide comparative information about the previous year's disclosures. So what are really elements that feature in the IFRS Foundation support for entities? Again, capacity building initiatives, and I think programs like this one is a good example. But again, I mentioned before the transition implementation group. This is really a key group where we're actually guiding companies to keep track of what are the developments there, because they're actually exploring and so an interesting dialogue with elements of the board around how some of the requirements should operate. I think it's important for you to keep track of that. The information is publicly available, and I think the sources are public. Looking into educational material, we do have a knowledge hub where some elements are already available. We will be covering two of them today, the one on TCFD and interactions with GRI on GHG. But there are also a number of materials that are coming up soon. All of those are in development, and we anticipate we will be able to share that with you in due course. Important elements is to providing guidance on current and anticipated financial effects. Again, elaborating further on materiality and proportionality, and some elements that should be able to guide you through your scenario analysis. I would like also to cover an important piece that was part of our materials released a couple of weeks ago, which is this ESRS ISSB standards interoperability guidance, because it does provide practical support for those entities that may need to comply with both sets of standards. It really illustrates the areas of alignment. It also articulates those areas where additional disclosures may need to be provided if you're starting under ISSB or under ESRSs. So it really includes a detailed analysis of the respected climate-related disclosures. And it really helps guide entities to identify which are the options that they would need to make in order to be able to navigate through those sets of requirements. So I'm reaching the end of the presentation, but again, just wanted to leave you some additional resources that are available for all of you, again, to identify how you should be applying IFRS 2 together with IFRS 1. And of course, the Knowledge Hub, it's a source of plenty of materials. Some have been developed directly by the IFRS Foundation. Some others are useful materials that are provided by partners and that can help you stepping stone in your journey. So cognizant of time, let me perhaps stop here. Thank you. Try to see if there are any questions in the chat. I think I've been told there is a question about if a jurisdiction is starting with climate first, whether there is a requirement again to consider ISSB standards. If a jurisdiction is incorporating IFRS S2 in the context of its climate first approach, but it's also introducing IFRS S1 as it should be, because we have discussed what's really the purpose of S1 in the context of IFRS S2. I think the requirement is really to consider the industry-specific guidance that's developed together with IFRS S2. It's not a requirement to consider other sources, but as I mentioned before, given the need to articulate the connections, it's also a useful source of information for companies. Again, both IFRS S1 and IFRS S2 require industry-specific disclosures. In the context of climate-related disclosures, the industry-specific guidance that's been provided together with IFRS S2 is the source for that. Trying to track the questions in the chat. I think there is a question about the dates for additional materials on proportionality and materiality. Let me just note that I think our teams are working hard. We're cognizant that these are important pieces to guide you through your initial steps. So we're working hard to be able to release that as soon as possible. So not sure whether there are any other additional questions. I think we can perhaps have another wrap up session if you have any pending questions after the introduction by Bing and Bella. But in the interest of time, let me perhaps hand over to Bing to cover GHG emissions in the context of IFRS S2 and GRI standards. Bing, floor is yours. Thank you. Give it a minute. Oh,
sorry, we're just trying to share the screen.
Bear with us for a minute. There you go. I think we can see the screen. If you can project them on presentation mode, we should be able to kick off.
Hello, everyone. Can you see the screen?
Yes, thank you, Bing.
Thank you, Jonathan. Thanks for your introduction. Yeah, actually, in this afternoon, in the second session, we'd like to share some views from ISSB and the GRI on the interoperability consideration for GHG emission reporting by both ISSB standards and the GRI standards at IFRS 2 and GRI and the GRI 305. As you may noted, we have known that the ASEAN capital markets are looking at how to introduce the ISSB standards alongside the already widespread use of GRI standards. It is said over 80% of listed companies in Asia Pacific region reporting with a GRI, but actually technically I think most of them are using the reporting approach defined by GRI as referenced to rather than comprehensive application. And there is also a strong interest from this region in adopting the new established ISSB standards, particularly S2 and the relevant part of S1, as mentioned by Jonathan just now. You may also note in the fourth quarter of 2022, a MOU between the IFRS Foundation and the GRI was signed. The two organizations will work closely together to align work programs and standard setting activities. Our work together is currently focused on two key areas. Firstly, we consider opportunities to advance interoperability between the ISSB standards and GRI standards to reduce the disclosure burden for companies that either choose to or are asked to apply both. We, for instance, refer to GRI as a potential useful sources of disclosures on topics preparers have found to be material for investors in compliance with IFRS 1, as known as a reference to external resources of IFRS 1, when it is relevant to the decision-making of investors and meets the objective of ISSB standards. We produced this educational content, which we'll explain today, jointly mapping respective disclosure requirements around GHG emissions. Secondly, we work together on capacity building with GRI. The Singapore Innovative Laboratory is a key example of this. Objective. This the main contents of interoperability consideration for GHG emissions when applying GRI standards and ISSB standards, as referred to earlier by me as the material, support entities currently reporting under GRI in transitioning smoothly to IFRS 2. 1. There is a high agreement between there's a high degree of alignment between the GRI GHG emission requirements and IFRS S2. 2. There are some advantage for the entities. For example, companies have already disclosed Scope 1, Scope 2, and Scope 3 GHG emissions using GRI 05 will be well positioned to disclose those GHG emissions in accordance with IFRS 2. We are going to brief you from three perspectives. The first one is a general introduction. The second one is analysis of requirements in GRI 305 and IFRS S2 related to GHG emissions. The third part is a mapping of requirements in GRI 305 and IFRS S2 related to GHG emissions. Let's take a look on the general introduction. In my understanding, the most important thing for us, if we want to transit to ISSB standards based on the current reporting in accordance with GRI 305, the most important thing is we need to, before we flag the interoperability, we need to keep in mind there are some difference between the IFRS disclosure requirements and the GRIs. In my mind, actually, three points are very important. The first one is reporting boundary or reporting entity. In accordance with paragraph 18 of IFRS 1, as flagged by Jonathan just now, actually the IFRS 2 and other topic standards of IFRS sustainability related standards will ask for an entity's sustainability related financial disclosures shall be for the same reporting entity as the related financial statements. That's also referred to as connections between financial statements and the sustainability-related disclosure. 2 is a requirement for industry-specific metrics or industry-specific disclosures. That's also very important because not only IFRS 2 but also IFRS 1 generally, we are asking for industry-specific disclosure related to not only climate change but also other sustainability topics. The third part shown as shown in this slide, slide 5, that's materiality comparison. Materiality. As you may notice, in IFRS S2 and S1, material is on the level of disclosure or metrics, not topics or risk and opportunities. It's disclosure, identify disclosure, material disclosure. You are required to do that. That's investor focus. That's investor focus. As defined in IFRS S1, a piece of information is material if omitting, stating, or obscuring that information could reasonably be expected to influence the investor's decision. That's material. You are required to disclose that. And in accordance with GRI standards, they defined material topic for all stakeholders, not only. So the first point is material topic on topic level. The second point is for all stakeholders, including investors, not investors focused only. Let's say that the material topic that reflect a reporting organization's significant economic, environmental, and social impacts, or that substantively influence the assessment and decisions of stakeholders. I think this is the biggest difference between the materiality in both in IFRS sustainability disclosure standards and the GRI. We need to pay attention to that. Let's move to next slide. Let's start our analysis of requirements in GRI 05 and IFRS 2 by the aligned requirements. These requirements represent key and significant area of alignment for disclosure GHG emissions. Many of the requirements for disclosure GHG emissions are aligned in GRI 05 and IFRS 2. For example, both standards require disclosure of gross Scope 1, Scope 2, and Scope 3 GHG emissions in metric tons of carbon dioxide equivalent. For Scope 2, both standards require disclosure of location-based emissions, and for Scope 3, both standards require a disclosure of Scope 3 categories included in the measurement. The standards cover the same GHG, greenhouse gases, the same greenhouse gases, and also the GHG 305 and IFRS 2 also refer to the same consolidation or measurement approach. That is to say, equity share and the operational control and the financial control approaches. But I need to flag it here again. The basic requirement for reporting entity or reporting boundary has been addressed in IFRS 1. That's to say, you are required to report generally as the same reporting entity with your financial statements. That's as required by investors to provide decision useful information together with those from your financial statements to investors to support their decision making. So that let's move to let's move to measurement framework. If a company in accordance with IFRS 2,
听不清，
oh sorry,
听不清，你看看网络还可以。
my connection is My connection is quite good.
热点应该
还在，是。Sorry about that. There may be some connection problem. Make sure. 在的，没问题。Yes.
我问一下啊。
Is this better now? Or is still not so working? So please respond us in the chat. Okay, it's better. Let's move. Go ahead. Oh.
You also 哦对，
确实是死掉了。
把这个video关掉。Okay, we're turning off the video. Hopefully it will work. So let us know whether it's better.
Sorry, because of the connection problem, we have to shut down the camera. I'm so sorry about that. Considering the interest of time, let's go ahead. Let's go ahead. Both standards include disclosure requirements for a company to provide transparency about how it measures GHG emission, and these requirements are largely aligned. For example, both standards require a company to disclose information about the approach, methodologies, inputs, and assumptions it had used to measure GHG emission. 好一些吗？
我这不行，您继续。
Okay. Excellent. Let's move to the second part of the second table of this part. Thus, additional disclosures required in GHG 05 and IFRS 2 can be aligned depending on the choices a company makes in applying the standards. Additional disclosures required in GRI 305 and IFRS 2 can be aligned further depending on the choices of company makes in applying the standards. For example, GRI 305 doesn't require a company to use a specific GHG emission accounting standards. However, the requirements regarding the GHG emission in GRI 305 are based on requirements in the GHG protocol and the GHG value chain protocol. IFRS 2 require a company to apply the GHG protocol in measuring GHG emission. Therefore, if a company elects to apply the GHG protocol in measuring its GHG emission, its disclosure can be aligned with the requirement in both IFRS 2 and the GRI 305. GRI 305 suggests that a company use Scope 3 categories included in GHG protocol value chain protocol in preparing disclosures about Scope 3. Sorry about that. Emissions. Whereas IFRS 2 requires a company, not suggest, requires a company to use the Scope 3 categories from GHG value chain protocol. To align its disclosure with the requirement in both standards, a company would thus elect to use Scope 3 categories included in the GHG value chain protocol. GRI 305 suggested that a company use a global warming potential, GWP, raised from the most recent Intergovernmental Panel on Climate Change, IPCC, assessment report. IFRS 2 requires a company to use the GWP values from the latest IPCC assessment available at the reporting date. To align its disclosure with the requirement in both standards, a company may thus elect to use the GWP rates from the latest IPCC assessment. GRI 305 requires a company to disclose the sources of emission factors, whereas IFRS 2 requires the disclosure of information that would enable an understanding of which emission factors were used. Therefore, to report in accordance with the requirements in both GRI 305 and IFRS 2, a company may disclose information necessary to enable an understanding of the emission factors used, including their sources. Okay, let's move to the last part of the analysis of requirements into standards related to GHG emissions. GRI 305 specific requirements not explicitly required by IFRS 2. The GRI 305 requires a company to disclose gross market-based Scope 2 in metric tons of carbon dioxide equivalent, if applicable, while IFRS 2 does not require a company to disclose market-based emissions. The company might disclose this information in accordance with other requirements in IFRS 2. GRI 305 requires a company to disclose Scope 1 and Scope 3 biogenic carbon dioxide emissions separately from the total gross emissions, and includes compliance requirements to specify how a company is to disclose this information. IFRS 2 does not require separate disclosure of biogenic carbon dioxide emission. However, paragraph 32 of ISSB 2 requires a company to disclose industry-specific information. When a company refers to the industry-specific guidance in implementing the ISSB 2, it may find metrics related to biogenic emissions would be applicable to its activities. GRI 305 requires a company to disclose the gases included in its calculation of Scope 1, Scope 2, and Scope 3 GHG emission. If the company applies the GRI sector standards, it may find recommendations, pay attention to that, that's recommendations, to disaggregate GHG emission by specific gases relevant to a sector. IFRS 2 does not explicitly require a company to report the gases included in its calculation. However, the company would be required to disaggregate GHG emissions by constituent gases if such information were material in accordance with the principles of aggregation and disaggregation in IFRS 1, general requirements for disclosure of sustainability-related financial information. See all the illustrative examples that accompany IFRS 2. GRI 305 requires company to disclose the Scope 3 activities included in its calculation of Scope 3 GHG emission. The company is also required to disclose any calculation tools used and the information about the base year, such as the rationale for choosing the base year, emissions in the base year, and the context for any significant change in emissions that triggered recalculation of base year emissions. The GRI sector standards include sector disclosures and the sector recommendations for disclosures from GRI topic standards. These recommendations, pay attention to that, that's recommendations, might result in a company disclosing information related to Scope 1, Scope 2, and Scope 3 GHG emission that is not required by IFRS 2. Although these GRI 305 specific requirements are not explicitly required by IFRS 2, a company's impacts on resources and relationships are identified in IFRS 1 as giving rise to sustainability-related risks and opportunities, and there is a general requirement in IFRS 1 to disclose information about a company's sustainability-related risks and opportunities that is material to investors. IFRS 1 also requires a company to disclose additional information if compliance with the applicable requirements in ISSB standards is insufficient to enable investors to understand the effects of sustainability-related risks and opportunities on the company's prospects. The company's prospects are defined by IFRS 1 as in short, medium, and long term, the cash flow, the capital accessibility, and the financing costs. Yeah, move to last part of part 2. IFRS 2 this is IFRS 2 specific requirements. IFRS 2 requires a company to disaggregate its Scope 1, Scope 2 GHG emissions between the consolidated accounting group and the accounting entity and accounting group and the other investees. IFRS 2 requires a company to provide information about any contractual instruments that would inform investors' understanding of the company's Scope 2 GHG emissions. The standard notes that a company might disclose information about its market-based Scope 2 GHG emissions as part of its disclosures. IFRS 2 requires a company that participates in one or more financial activities associated with asset management, commercial banking, or insurance to disclose additional information about the financed emissions associated with those activities as part of its Scope 3 GHG emission disclosures, as flagged by Jonathan just now. Is required not only to disclose your material disclosure, but also how to disclose that in accordance with the metrics provided as an application guidance in IFRS S2. It's not part of non-mandatory in the accompanying guidance. It's mandatory part in the application guidance. IFRS 2 includes various reliefs and requirements related to the measurement of GHG emission, including, for example, requirements when reassessing the scope of value chain, using different reporting periods within the value chain, and using emission factors that better represent the company's activity. For Scope 3 GHG emissions, there are requirements on the use of specific metric framework to measure Scope 3 GHG emission, and for reassessing Scope 3 categories and the companies throughout the company's value chain in case of significant event or change in circumstances. IFRS 2 requires a company to disclose why it chose the measurement approach taken and how that approach relates to the objective of the disclosures. It's not only in IFRS S2, but also in IFRS S1. IFRS 2 requires a company to refer to and consider the applicability of industry-specific metrics associated with disclosure topics described in the industry-based guidance on implementing IFRS 2, the accompanying guidance of S2. This requirement may result in companies disclosing information related to Scope 1, Scope 2, and or Scope 3 GHG emissions that would otherwise not be required by GRI 305. The GRI standards require a company to disclose information about its most significant impacts for all stakeholders. The information covered by these IFRS S2 specific requirements can be used for the purpose of GRI reporting, where it provides relevant information about the company's most significant impacts. Let's move to the last part, part 3. The mapping of requirements in GRIs 305 and IFRS 2 related to GHG protocol. This mapping table outlines the requirements of that have been assessed to compare Scope 1, Scope 2, and Scope 3 GHG emission disclosures between GRI 305 and IFRS S2. But this table does not reflect all requirements associated all requirements associated with measuring and disclosing GHG emissions. A company measuring and disclosing its GHG emission should refer to GRI standards and ISSB standards in full. That's to say, lots of you may be quite familiar with what we call reconciliation or reconcile. For example, from IFRS to say US GAAP. As a foreign private issuer, more than 10 years ago, you can reconcile your financial statements from prepared in accordance with IFRS accounting standards to the US GAAP. What we are talking about here is not a matter like reconciliation. No, you must refer to GRI standards and the ISSB standards in full. Okay, we also provide some materials to support the application of both IFRS 1 and S2, as mentioned as flagged by Jonathan just now. This is the list of the materials so far, and you are extremely encouraged to check all of this. It's very helpful to get a further understanding on what we are asking for and what we are not asking for. In short, I'd like to summarize my introduction in the second session in this afternoon as a couple of points. The first thing is keep in mind, ISSB standards is a global baseline of sustainability related disclosure. Global baseline of that to support the decision making, the investment decisions made by capital providers. So we are investor focused because if you want money, if you want to get benefit from this establishing a funding mechanism towards decarbonization, you need to provide your information in a transparent way, in accordance with general accepted standards. That's us. That's why we are lots of jurisdictions they are discussing how to incorporate our standards as a global baseline into their local corporate disclosure system. So we are focusing on how to help you to get money. The key point is to provide information relevant to your to valuation, and so then millions of decision makers who are making their investment decision form the price of your equity. That's to see the value of your company or the prospects of your company as a part of to review your performance in decarbonization or other sustainability related matters as a part of your value. And the second point I have to say, considering to satisfy the decision-making needs of investors, our standards are designed as a part of robust inputs for investors, used together at the same time with your financial statements. There are some connections between financial statements and the sustainability disclosure, as mentioned, flagged by Johnson just now. So the third point need to keep in mind is we are set up standards as designed in order to support mandatory implementation. That's to say the information in accordance with our standards shall be comparable, assurable, and enforceable. That's very important. And that also means it's not only a challenge to your capacity, but also to the capacity of your regulators, your public policy makers, and your investors, and both in your practitioners and the current potential investors. So that's not easy, but that's a travel we must start as soon as possible. I'm so glad to be invited to join you this afternoon to introduce and to share some views on this. And I'd like to continually to get involved in this with ACMF stakeholders and ASEAN capital market participants to listen to you and to share our views with you. Thank you so much.
So I think, given the time, we might choose some questions to answer. Sorry that we might not be able to have time to answer all the questions. So Jonathan, do you want to pick a few questions that you would like to answer first, so Bing can have time to look into the questions? Thank you.
Sure. Thank you very much, Yaling. And of course, there are a number of very interesting questions, in particular regarding consolidation, aggregation, on control, particularly on emissions. And I would invite perhaps Bing to cover that. If I can take some of the questions, for instance, there are some that relate to consolidation of the entity. And again, let me just go back to what IFRS S1 determines, which is again the same reporting entity, which means that again, in terms of determining, and I'll leave aside, GHG emissions, but in terms of the definition of the entity, I think it's important to apply the same conceptions that would feature in IFRS accounting standards in order to determine, I think, the reporting entity. There is, I think, a question related to clause 56 of S1 that I think suggests how an entity should look into the identification of risks and opportunities when there is no thematic standard by IFRS S1. And let me just note that I think the remaining paragraphs in that section, so paragraphs 57 and 58, I think they cover the sources of guidance and the type of information that entities could rely upon if they were to disclose other sustainability risks and opportunities beyond climate in the absence of an ISSB standard. I think there's some good questions on equity and control, particularly for emissions, and maybe Bing, you can cover that section, particularly scope 1 and scope 2 and the different options in light of the greenhouse gas protocol. I think there is an element as well on relating to, I think, clause 41 of S1, which talks about assessing resilience, which is one of the requirements in IFRS S1. And of course, for climate, I think there is a tool to try to add to how the company is addressing its resilience through scenario analysis. And I think until the ISSB develops further tools for looking perhaps into the assessment of the resilience of other risks beyond climate, I think the intention is for entities to be able to disclose what are the assumptions that feature into that assessment. So we're not prescribing any particular methodology to describe how a company assesses resilience. But again, scenario analysis is a tool that's specific for climate, but it may provide some useful foundations. I think there is an element as well on, I think, the basis for conclusions relating to the dependency on business relationships and whether that, I think, goes too far. And I think B3, so basis for conclusion number 3, I think articulates perhaps in further detail and provides an example of, for instance, for a food company, how the way it impacts or affects a resource that is so critical for its business, a key input, which is water, how that could feature. So it tries to articulate that interlinkages and interdependencies with impact. So I think it's important for all of us to get familiar with some of those considerations, I think, in the standards. For GHG emissions, and I think there are a lot of questions as to how you actually define the boundaries of that. I'll perhaps turn, I think, to Bing to cover that, but I think, again, looking into the GHG protocol, I think, and again, it's important to look into aggregation and disaggregation and how that goes along. So perhaps, Bing, you may want to cover that one more specifically.
Thank you so much, Jonathan. Thank you so much. Actually, I agree to your response relating to the scenario analysis. Actually, the scenario analysis is a approach required by the IFRS S2 to review the climate resilience, and we also asking for the disclosure of resilience for other sustainability related risks, but the scenario analysis is not clarified. Scenario analysis must be used to review the resilience other than climate related, and also on this point, I'd like to flag the quite like TCFD, we didn't define what scenario analysis is exactly, because it's a very broad scope, and it's dependent on the situation, the own situation of reporting entities, of companies itself. You need to consider your capabilities, skills, capabilities, and the sources commensurate with your own situation to choose the right approach without any undue cost, based on the information available on the reporting date, without any undue cost or effort. And also, I'd like to cover a question whether there are equivalents of IFRS to S1 in the topic standards of GRI. Actually, if we check the architecture of GRI standards, IFRS 1 is more similar to the GRI 100 standards, 101, 102, 103. It's asking for a general. It's generally asking for disclosure. It's cited if you want to make a compliance statement of ISSB standards, you need to take the general responsibility required by the IFRS S1. So IFRS 1 is not only a overarching structure of this, but also provide the most important thing is IFRS 1 asking for a general requirement responsibility for even if it is. Even is not so specifically required by topic standards of like IFRS 2 or in future 3, IFRS 4, if it's relevant to investor decision making, you have the responsibility to provide that. And also I'd like to pick up a question related to double materiality or single materiality related to ESRS. That's a very good question, because there are also this question also been raised by local stakeholders in mainland China and Hong Kong. I have to say the so-called double materiality or single materiality is not a question making sense. It's not a question making sense because if you check the definition of materiality of what material topic is from GRI standards, and how to assess the materiality in accordance with IFRS S1, you will find actually it's on different level and from different perspective. In my personal view, I will see we are going to asking for disclosure by reporting entity to provide transparency to investors. To satisfy the information needs of investors rather than other stakeholders. That's the nature of this global baseline, to support a funding mechanism towards decarbonization. That's the value of our standards. And from the perspective of GRI standards, it focuses on multi-stakeholders, maybe include investors, and also they emphasize the impact of companies to the economy, environmental, and the social stakeholders. If you check the paragraph 2 to 4 in IFRS S1, you will see lots of interaction and independency. That's how we define the sustainability-related financial disclosure of sustainability-related disclosure in IFRS S1. That's to say, in the process of creating value, or creating your prospects anyway, to form your prospects, the reporting entity, exchange the resources and the relationships with stakeholders from outside environments, including nature, social stakeholders, financial, blah 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 blah. That emphasize interaction and independency between the reporting entity, the company, and the external environment. So from our perspective, in accordance with the definition of IFRS S1 of materiality and the sustainability related risks and opportunities, we emphasize the interaction and interdependency rather than impact on material. If you check the whole wording, the whole context of IFRS 1, you cannot find financial material or financial materiality or impact materiality. So we focus on to provide robust inputs to investors. And from the perspective of investors, many of you call impact of financial have to be considered by the investors when they want to invest or quit a investee or company. Thank you so much. Considering the interest time, I must pause here. Let's find other opportunity to further share. Yeah, Jonathan.
Just very quickly, I think there are a couple of questions that actually suggest that interplay between the work of the ISSB, so on financial statements, and also looking into the reporting entity and ISSB. And I just wanted to note that I think the ISSB, which is actually looking into standard setting into the financial statements, they announced, I think in April, that they are likely going to expose a draft to obtain feedback on stakeholders around how the effects of climate-related risks and other uncertainties can actually feature into the financial statement. So I think watch for that, because I think it will be coming, I think soon, as we do generally with our due process, there will be an exposure for that. So the ISSB will be also trying to cover the potential implications of some of this sustainability and climate-related risks and opportunities into the financial statements. So I think just to cover a couple of questions that were relating more into the financial statement side of things, and of course the issues around consolidation. But I invite you, for those of you, to look into some of the aggregation aspects, and of course I think some of the clauses in relation to the control and equity method. Let me stop here and turn to Bella. Thank you.
Thank you, Jonathan.
I think Bella is going to deliver the third session. So
hello everyone. I'm turning on the camera so that everyone can see what I'm looking like. But I will turn it off just to make sure the connection stable. So just wait a moment. Okay. Just check whether you can see my shared screen.
Yeah, we can see that. Thank you, Bella.
Thank you, Jonathan. Okay, hello everyone. Nice to meet you all here. I'm Bella from the IFRS Foundation Beijing office, and I'm in charge of especially in China. I hope everyone is comfortable with the topic of application of IFRS S1 and the GRI and the ISSB standards interoperability so far. We are now on to the last unit of this training. We are going to review how to transit from TCFD to ISSB. In this session, we are going to achieve 3 objectives shown on this slide. First, we are going to cover the purpose of transitioning from TCFD to ISSB. Then we are going through the differences between TCFD recommendations and the requirements of ISSB standards, especially IFRS S2. Finally, I hope you can develop your own sustainability disclosure plan based on what you have learned today. This slide shows the structure of this section, which is also consistent with the 3 objectives. I'm going to firstly introduce TCFD and ISSB, and then talk about the comparisons between IFRS S2 and the TCFD recommendations. Finally, I'm going to give you a few tips on getting started. Here is the background information of ISSB and the TCFD. I think you'd better to be aware of. The ISSB has reduced the so-called alphabet soup of sustainability-related financial disclosure standards and obtained international support to create a global baseline of disclosures for global capital markets. The ISSB designed the IFRS sustainability disclosure standards to enhance investor and the company dialogue by consolidating and aligning the resources of other investor-focused initiatives, such as CDSB, which is the Climate Disclosure Standards Board, the Value Reporting Foundation, and the TCFD, the Task Force for Climate-Related Financial Disclosures. After the ISSB issued its sustainability disclosure standards, which is IFRS S1 and S2. The IFSB, which is Financial Stability Board, which established the TCFD in 2017, asked the ISSB to take over from the TCFD the monitoring of companies' progress on climate-related disclosures. The IFRS Foundation began this work in 2024 as companies around the world start applying IFRS S2. This provides continuity for the TCFD's implementation status reports. So specifically, the IFRS Foundation will take over monitoring and reporting to the IFSB about companies' progress in implementing climate-related financial disclosures. So tentatively, this work will start in the autumn of 2024. These reports will provide continuity with TCFD implementation status reports to the FSB. The ISSB welcomes and acknowledges the importance of this requested transfer of responsibilities. In effect, the culmination of the work of the TCFD acknowledges that the objectives that lead to the creation of the TCFD recommendations have migrated to the ISSB and are embodied by the ISSB standards. The FSB announcement is a recognition of the importance of moving TCFD on from a set of recommendations to what we have now. This is a robust ISSB standards that can be regulated consistently and globally. But this doesn't mean the TCFD recommendations have disappeared or that companies can't use them going forward. Using the TCFD recommendations is a good entry point for a company preparing to apply IFRS sustainability disclosure standards. Although the work of the TCFD is completed, the TCFD recommendations remain available for a company to use. So as said by Jonathan, ISSB standards apply TCFD structure to set out core content areas. So IFRS S1 requires a company to disclose information about its governance, strategy, and the risk management, as well as metrics and targets in relation to its sustainability-related risks and opportunities. These 4 core content areas reflect how companies manage those risks and opportunities. So the 4 core content areas are consistent with and built on the TCFD recommendations, extending the structure of the recommendations to sustainability-related risks and opportunities beyond climate. Just like IFRS S1, IS2 requires a company to disclose information about its governance, strategy, and risk management, as well as metrics and targets, but specifically in relation to its climate-related risks and opportunities. So on this slide, this table shows the task force recommendations and the supporting recommended disclosures. In short, this is 4 pillars and 11 questions. I just would like to remind you about what are the TCFD recommendations and won't take time to go to the details. So now I'm going to spend some time on comparison between IFRS S2 and the TCFD. The IFRS Foundation published a comparison of the requirements in IFRS S2 climate-related disclosures with the TCFD recommendations last year. I said earlier, the requirements in IFRS S2 are consistent with the 4 core recommendations and the 11 recommended disclosures published by the TCFD. The paper contains tables summarizing some differences between the core content requirements in IFRS S2, including associated application guidance, and the TCFD's core recommendations, recommended disclosures, and guidance. These differences take 3 forms. So, for example, IFRS S2 uses different wording to capture the same information as the TCFD recommendations. In other words, in these cases, the requirements in IFRS S2 are described as being broadly consistent with the TCFD recommendations. And the second is that IFRS S2 requires more detailed information that is in line with the TCFD recommendations. And the third one is IFRS S2 differs from the TCFD guidance, but not from the TCFD overall recommendations. This is mainly by providing some additional requirements and guidance. You can click the link through the paper after the training. So here comes the comparison table. Well, the table on this slide shows the comparison results. In summary, as you can see in this table, TCFD recommendations and the IFRS S2 are broadly consistent, and IFRS S2 has additional requirements that need to be taken into consideration. So first, in the governance part, we don't see differences on governance between IFRS S2 and the TCFD recommendations. Just one thing to mention is that IFRS S2 has additional specificity on the recommended disclosure of describe the board's oversight of climate-related risks and opportunities. For instance, IFRS S2 requires the disclosure of more detailed information, how the governance body or individual responsibilities for climate-related risks and opportunities are reflected in the terms of reference, mandates, role descriptions, and other related policies applicable to that body or individual. In terms of strategy, IFRS S2 additionally requires a company to refer to and consider the applicability of industry-based disclosure topics in the industry-based guidance in identifying climate-related risks and opportunities. And also IFRS S2 doesn't specify the particular scenarios that a company would be required to use in its climate-related scenario analysis. But IFRS S2 requires additional information regarding resiliency on, for example, the significant areas of uncertainty considered by the company in its assessment, and also a company's capacity to adjust and adapt its strategy and the business model over time, and also the details on how and when the climate-related scenario analysis was carried out. Besides, in the section of strategy, here are some information regarding current and anticipated financial effects of the risks and opportunities on a company's financial position, financial performance, and cash flows. IFRS S2 sets out criteria for when quantitative and qualitative information is required. Disclosure of only qualitative information is permitted under some circumstances. For example, when a company cannot separately identify the effects of the risk or opportunity, or when the level of measurement uncertainty involved is too high. When preparing disclosures on the anticipated financial effects, IFRS S2 requires a company to use all reasonable and supportable information that is available at the reporting date without undue cost or effort, and it requires the use of an approach that is commensurate with the company's circumstances. So the phrase that without undue cost or effort shows in different places in the standards IFRS S2. Yes. As for risk management, the requirements of IFRS S2 related to opportunities are not in the TCFD recommendations. For example, IFRS S2 requires additional disclosures on the processes used to identify, assess, prioritize, and monitor opportunities. Also requires additional disclosures on the extent to which and how the process used to identify, assess, prioritize, and monitor opportunities are integrated into and inform the company's overall risk management process. In the last part, in the metrics and targets part, IFRS S2 requires disclosure of industry-based metrics relevant to a company's business model and activities. Also, IFRS S2 requires additional disclosures related to a company's GHG emissions. So, for example, a separate disclosure of Scope 1 and Scope 2 GHG emissions for the consolidated accounting group and associates, joint ventures, and consolidated subsidiaries, etc. And also, for example, Scope 3 GHG emissions disclosures, including additional information about the company's financed emission if the company has activities in asset management, commercial banking, or insurance. Yes. So on this slide, we mentioned industry-based guidance or metrics several times because we know that industry-specific disclosures are decision useful for investors. This is because the effects of sustainability topics vary by industry, and the investors analyze companies and portfolios by industry and sector. By asking for industry-specific disclosures, companies can focus on reporting that better describes their business and is more relevant. This helps improve ease and reduce the cost of reporting. Industry-specific disclosure also improve signals and minimize noise by surfacing the most relevant information to investors and other providers of capital. So as you can see, both IFRS S1 and S2 require that industry-specific information be provided, but don't stipulate the exact information that is required. This is for a company to decide. However, guidance is provided to assist companies in providing these disclosures and to facilitate the provision of more comparable decision useful information for investors. Now we are on the last part of this training. How can you start transitioning from the TCFD recommendations to IFRS sustainability disclosure standards? Here are some suggestions for getting started. Firstly, I highly recommend you read through the requirements of IFRS S1 and S2. Although they are built upon the known and widely used TCFD recommendations, you still need to know what are written in the standards. The second step is to use the IFRS S2 and the TCFD comparison table to identify gaps between the disclosure requirements of the TCFD recommendations and the IFRS S2. Then take action to fill any gaps identified between your current climate-related disclosures and the IFRS S2's requirements. And the last step is to assess whether you need to change your company's governance, risk management strategy, or reporting to comply with IFRS S1 and IFRS S2. And also assess whether you need to make any changes to the timing of your disclosures. IFRS S1 requires a company to publish financial statements and the sustainability disclosures at the same time. However, IFRS S1 grants transitional relief in the first year a company prepares sustainability disclosures in accordance with IFRS S1. The following slides are comparison tables with detailed information for your reference. You can read through after the training, or you can click the link to the publication for further information. Now, I hope you can start the transitioning journey very soon. Thank you very much.
We have a new question. Not sure whether Jonathan you would like to take or Bella.
Yeah, thank you, Eliane. I was just going through the question. I think the last one talks about companies that do have diversified businesses and do have segments that operate in different sort of industries. And the question is whether the company is required to look into different industry-based guidance. And again, I just wanted to reiterate again, that materiality filter is not about disclosing every piece of information. It's about identifying and disclosing information that will be material for investors. So that type of information that could actually impact, I think, any decision making. But of course, if it's a consortium that operates in different business sectors, I think the company would need to look into those aspects in order to present information at consolidated level. A different thing is whether those segments operate in different subsidiaries. So the information, I think, at subsidiary level, if there is a requirement to do so, would be different. If I can just go back into some other questions, I think there was a question whether there was a relief on GHG emissions in accordance to IFRS S1, and I think that relief specifically belongs to IFRS S2. So when I listed, I think in the slides, the different reliefs, and I think I cited 5. Some of them do reside in IFRS S1, whereas the one for scope 3 of GHG emissions is a relief that's already provided in IFRS S2. So I think that covers a bit of that. I think there were some questions around whether we would make available some of the slides, and I think as Sabrina mentioned at the beginning of the session, I think there will be a link, I think, to the recording of this session, and I think we can make available some of those materials as well. I do take there are a number of questions, again, as I mentioned before, related to consolidation, the interplay with IFRS accounting standards, some questions on IAS 28 and IFRS 10. So I think it's important as well to look into the ISSB related developments that will articulate some of that. But if we're talking about particularly GHG emissions, I think there is already information available in IFRS S2 to guide that. And again, I would invite you also to look into some of the accompanying guidance and illustrative examples. I think some of those aspects are already covered there, may be useful for that. Not sure whether there are any additional questions, either touching on the first session, focusing on the elements of S1, looking into the interoperability aspects of GHG together with GRI standards, or the journey to walk from TCFD to ISSB standards. There was a question, I think, that Bing covered on materiality, and I think that is important. I think the ESRS's ISSB interoperability guidance, as you know, CSRD and the related ESRS standards do have a double materiality approach in the sense that they're covering impacts as well. I think it's important to look into some of the presentation issues and some of the materiality considerations in that guidance, because I think that will provide useful information as to how companies can navigate those aspects and highlight, identify, make distinguishable those pieces of information that are particularly relevant for investors. So I think we're reaching the end of the session. I don't know whether Abigail may want to have some, or Sabrina may want to have some closing remarks, but again, we're available to answer any questions. We've taken stock of the questions as well. We will reflect on some of those, and we will share, I think, with our technical teams so that we try to give some response. And we also look forward to further engagement with all of you as we approach, I think, other opportunities through ACMF. Sabrina, floor is yours. Thank you.
Thanks very much, Jonathan. Yes, Abigail had to drop off, but I'll just a very short one. So just thanks everyone, for joining us today. We've come to the end of the session, and we hope that you found the session useful in gaining a deeper understanding of the ISSB standards. So on behalf of everyone today here, I just also want to say a big thank you to Mr. Bing Ling and Mr. Jonathan Bravo and Ms. Bella Cheng for the very insightful sharing and addressing the very many good questions that were raised by the audience. And I also wanted to say, I've been on these sessions for since it's began, and I think the quality of questions and really reflect how much people are really engaging with the standards, and I think that's very heartening to see. So for those here today, we will greatly appreciate any feedback that you have on the session, any areas of improvement as well as areas you would like to be covered in future training sessions. So Yihui has just popped the feedback link in the chat, and so we'll also circulate this after the this session. As Jonathan mentioned, we'll have a link to the recording of this session on the ACMF website in due course. Any materials that ISSB can share, we will also pass it on to registered participants. So thanks very much, everyone, again, and a very good afternoon to you. We'll see you again then.
Thank you all.